Dear investors, welcome to Valstybės investicinis kapitalas meeting with investors. I'm Emilia from Nasdaq Vilnius, and I'm delighted to be the moderator for today's event. We will start with a presentation from the management, which will be followed by the Q&A session. As always, I encourage every one of you to ask questions during or after the presentation in the question box of your screen. With that said, I am pleased to introduce today's presenters, CEO of Valstybės investicinis kapitalas Robertas Vyšniauskas and CEO of Valstybės investicijų valdymo agentūra Dainius Vilčinskas. Gentlemen, please, the floor is yours.
Hello, ladies and gentlemen. It's nice to see you here in the investors presentation. I'm Robertas Vyšniauskas, and hereby I present the presentation of Valstybės investicinis kapitalas. So let's go forward. Here I'll provide two parts: introduction and information regarding the bonds. And Mr. Dainius Vilčinskas, CEO of Valstybės investicijų valdymo agentūra, I'm going to present the third part regarding the fund. So let's proceed then. What do we have? What is the background of our situation? 2020 was rather interesting and unexpected year. COVID-19 appeared, an outbreak. And actually, EU Commission, all countries were affected actually, and EU Commission passed the communications regarding the framework of state measures. After that, of course, all countries had to solve their situation and to go for the structure and scheme to the EU Commission. The same did in Lithuania. Lithuania applied to the EU Commission, and the EU Commission approved the structure, how to finance and how to help that affected businesses. So generally speaking, all structure, what I'm trying to present today, is approved by EU Commission in May 2020. After that, in August, the company issue of Valstybės investicinis kapitalas was established, of course, the same as Valstybės investicijų valdymo agentūra was established too. Those two companies are main companies in that structure. In September 2020, Minister of Finance and Minister of Economy and Innovation approved the description of activities of Measure State Fund. This is the main legal document that established two companies and obligations, how they established that fund, how they do manage that, and what the consequences comes out of that. Of course, two companies, issuer and fund manager, that is Valstybės investicijų valdymo agentūra, signed participation agreement and therefore established the fund itself. After that, it's rather essential to mention you all that in 2020, in January, European Central Bank recognized issuer as recognized agency. That means that ECB can directly or indirectly purchase notes from the market. So let's proceed. The project structure is rather essential to provide that at least two ministries are involved in the structure. Ministry of Economy and Innovation is the main shareholder and sole shareholder of issuer, and the Ministry of Finance is the sole shareholder of a general partner, or would be Valstybės investicijų valdymo agentūra, or VIVA. It's just highly important to mention that in the whole structure was involved bank and is involved Bank of Lithuania, which is at the moment participating in supervisory board and also in advisory committee. Advisory committee that passes the decision regarding the fund, whether to invest beyond the investment strategy or not. But basically speaking, it's rather important to stress that those two ministries and Bank of Lithuania were chosen to this project due to that to make it independent and apolitical. Actually talking to minimize all risks from political cycles or government changing cycles. Therefore, those three institutions are involved in the structure and participate in it, actually. So regarding the fund, two companies establish a fund, that is the issuer and the VIVA. The fund itself, as agreed in the EU Commission decision, has three phases. First phase is 100 million, had to be provided by the issuer. That is already done. Issuer provided such fund. Second phase is that the issuer could provide up to 400 million euros. This is outcome from our program, meaning that this stage is at the moment we have the program for 400 million bonds, and therefore we are looking forward to receive that funds and to proceed them to the fund. First stage would be if the fund itself would attract institutional investors, and they could be up to 500 million. Overall, the fund in the EU Commission decision is allowed to be up to 1 billion euros. So let's proceed then. Now, the transaction review. So basically speaking, at the moment, we're talking about the whole program of 400 millions of the bonds of the issuer. So this program should be guaranteed by the state guarantees, meaning that at the moment, let's be honest, you all know that at the moment, state issued the guarantee only for 150 million. This is why that came, because at the moment the needs are like that, so therefore the government wanted to issue the state that corresponds to the needs. So it issues 150 million. But there is the agreement from all stakeholders, of course, because we have the 400 million program itself, that in case it's needed additional funds, the additional state guarantee would be issued. And actually not only the same, but in the same content and in the same scope, actually. So only the amount should change. So therefore, we have the program, we have the state guarantee, and what we do collect that funds, and we proceed to the fund. The fund itself is managed by, as I mentioned before, Valstybės investicijų valdymo agentūra, or VIVA, and Mr. Dainius Vilčinskas will provide more detailed information how the fund is managed, how the company is managed, and how they do investments. So basically speaking, the fund itself receives the money from the issuer, and of course invests into those businesses who are affected by COVID-19. What is essential to stress? Yes, we have EU Commission decision allowing to do that, and it has the term, as someone already had the question. It's ending at the end of 2020, at the end of December, and we have more information. Like, it's most likely that EU Commission decision would be prolonged for at least half a year. But despite that fact, in case it won't prolong, the fund itself, have to agree and to pass the decision to invest into the target before the date, meaning that before the end of 2021, and afterwards. But it can disperse the payment all over the next year, meaning that 2022, all disbursements and according to agreements and decisions could be done. So this is rather essential, and let's proceed then. Yes, now to the bond issuance. Main highlights. Yes, the issue of Valstybės investicinis kapitalas is owned, as I mentioned before, by Republic of Lithuania. So therefore, is essential to stress that what is the credit rating of the government at the moment. And now it's really is one of the best historical credit ratings are obtaining. So government has by S&P A+ provided credit rating, by Moody's A2, and by Fitch it's A. Another important issue is that, of course, this project is of high strategic importance, and all main institutions, as I mentioned before, 2 ministries and Bank of Lithuania are involved in that. So therefore, that guarantees support and quick decision making in situations when it's needed. So it's good done. The third one, yes, is and essential today is talking that Fitch rating provided A credit rating for all programs. And of course, it took into consider the state guarantee and the strength and quality of it. And finally, yes, the issue is managed by highly experienced teams and team of professionals, and I'll present you in several next slides. So let's proceed. State guarantee, yes, quite essential. All program, as I mentioned before, should be secured by independent, unconditional, and irrevocable guarantees of the government. And at the moment, yes, we have the guarantee only for 150 million. But despite the fact, if need arise, additional state guarantees will be in place, and we would proceed with going on the market. But at the moment, I need to stress that each state guarantee would be fully covered, meaning that nominal value plus interest and other payables should be covered. And also it should be timely, meaning that all demands all claims would be paid within 30 days. Of course, state guarantee would be valid until all these bonds guaranteed should be redeemed. And definitely, it's true that it should rank equal or legally speaking pari passu regarding to other claims that are insecure. So these are main things of the state guarantee that we provide here. So it's essential one for all of us. So and finally, so let's proceed with management of the issuer. So this structure is very lean, as we have only CEO and the board. Actually, board definitely is more. 2 members are independent, so therefore to ensure that the whole structure is independent and could follow with experience. So and the board is chaired by Mr. Šarūnas Ruzgys, who has extensive experience in management of financial institutions and funds. Therefore, I have to mention management. He was the board at Luminor Asset Management Company, and also a president for Lithuanian Investment and Pension Funds Management Association and other activities. Therefore, he had extensive experience in fund management, in financial institutions, in cross-regional multifunctional financing projects. Additionally, I need to say that we have another independent board member, that is Jonas Gložė, who is advocate and who has gained huge experience in risk management, business law, of course. Therefore, I would like to mention that he, and together with colleague, another board member, which is dependent, Thomas Urban, both are involved in as members of board in Invega. Actually speaking, that Invega is quite similar, or not similar, but quite alike, like Viva or fund manager in our structure. So therefore, the experience is rather essential for our case, just to understand how it should be done in the best practice. So what's left, me personally, I am CEO, and my background is legal, and also I can gain lots of experience in corporate governance, risk management, business development. Therefore, I have been a board member at Vilnius Prekyba, that is the biggest privately held company group here in Baltic States that has retail chains, pharmacy chains, and shopping malls, and management companies, and other, and etc. So additionally, I have to mention that currently I'm holding position as a board member and a member of audit committee in EPSOG, that is state-owned energy sectors company that holds Litgrid, Ambergrid, 2 listed companies, TCOs actually, and additionally several companies too. So basically, we do extensive experience to manage the issuer, and this is it. So basically, I have covered two of the parts, and I would like to give the stage to Dainius, who could present all information regarding the fund. So Dainius, the stage is yours.
Okay, thank you, Robertas. So I will try quickly to guide you through the main attributes of activity of managing company. So let me start by the introduction of my team. I'm CEO for the company, and I have almost 2 decade experience working at one of the largest financial institutions in Baltics, Swedbank, where in my last position for more than 5 years, I was leading corporate banking unit I had a responsibility for corporate banking business in all 3 countries, so Lithuania, Latvia, Estonia. So I have some of experience lending money to corporates in Baltic countries, and as the main nature of fund was to provide liquidity in form of financing and investments to medium and large corporates in Lithuania. So in most of the cases, it was foreseen that the funds will reach companies in form of lending transactions. For that purpose, for us, it was really important to collect the team of specialists who have experience in lending funds to large corporates and medium-sized corporates, as well manage investments. And big focus in our team we have on risk management, which is credit risk management and IML. So IML is an extremely important item on our activity list as well as it is important for banks. So I'm quite happy to have a team of true professionals with long track record in relevant sectors. So this team is delivering now the result and is managing the fund. And if the fund, by its nature, Roberts, you can flip the slide, please. The fund, by its nature, I would say, is the first attempt by Lithuanian state to be a true partner for medium and large corporates in Lithuania, where the state provides liquidity and funds to companies that are in a shortage, and to companies that don't get access to funds from the market. Robert, please back one slide.
Sure.
So the team has good skills in lending, invest management, managing risks, and very important attribute in building this whole governance structure was to develop a structure that would be very transparent and that would secure independence from political implications possible in the future. So the structure operates at arm's length from the shareholder, and for that purpose, lots of energy was put to collect as well members to the governing bodies that are independent and that have a proven track record in various fields of activity. So M&A experience, lending experience, risk management experience, and etc. So in the team, we have a board that consists purely out of independent members. The board serves as well as investment committee. So you see those persons on the left side. And then as well, we have a supervisory board. Currently, there are 4 members. The fifth one is vacant position. So we, together with the Minister of Finance, have initiated recruitment process. So hopefully this vacant position will be filled in soon. So in a supervisory council or supervisory board, we have as well, I would say, brand names in Lithuanian financial sector who have an international experience as well. And we have a representative from Lithuanian Bank and from our shareholder, which is Aušra Vičkačkienė. Next slide, please. So what's the business model for the fund? So initially, when COVID hit the world, in Lithuania, it was thought that Lithuania needs as well a vehicle that will serve the purpose to provide funds to Lithuanian companies. And for that purpose, initially it was thought that the severity of the impact to Lithuanian economy might be really harsh. So for that purpose, 1 billion was set as a target for the fund. But of course, the fund size directly correlates with the health of the economy. And now we are luckily can say that Lithuanian economy survived well. And just several sectors, several companies are in need of our services. For that purpose, we don't speak about 1 billion anymore, and we are saying that maybe 250 is the target portfolio as we see it today. And Robertas has described in what stages we are planning to grow the fund. Then the targets or the goals for the fund that were set initially. First of all, the first target is to provide financing to companies that were hit by COVID-19 and that have limited access to financing from banks and other privately owned financial institutions. So this is a primary target, to help those companies to survive this difficult period. Second target was to work in the way that would allow to promote capital markets more. For that purpose, we mainly operate through bonds, and I will speak about it a bit later. Then what we do, in most of the cases, we provide this traditional type of financing to companies, and we do it in a quite similar way as the banks do. Just we don't compete with banks. We rather complement and fill in those market gaps that we see. And banks behave a bit procyclical. So usually when there are some uncertainties in the markets, the banks are a bit pulling back. So we are stepping in, and we are filling the gaps in the market and by providing financing to those companies that need it in various forms. And of course, the way we provide financing, we act on market terms. So we apply interest rates on our financing, and those interest rates correlates to the risk profile of the target that is getting our financing. Next slide, please. We operate various tools. So we can provide financing through loans. We can provide it through debt securities, or we can invest directly into share capital or through hybrid instruments. But as it was agreed with European Commission, most of the transactions will be done through bonds, and we say that not less than 70% of our books will be done through bonds. So the transactions that we have concluded so far largely are constructed through bonds. And why bonds? Because at some point of time we intend to offer part of our books to the secondary market to be listed. So, like I said, to promote bonds as alternative way to attract financing is one of our key targets, and we put lots of attention on that. We can go into equity investments in very exceptional cases. This is restricted by European Commission regulation as well, but from the companies that have applied for financing, we almost see no options or no interest in this type of financing. And loans can be quite small, in quite small amounts. And I was speaking about professionalism of my team. So one of the important attributes of my team is ability to dig deeper into customer needs, into customer ability to service our debt, and to structure financing in the way that would be the most relevant to that cycle of the companies that are applying. Next slide, please. So who are our targets? So there are several key criteria. So first of all, the company have to be affected by COVID-19, and as we have been operating now for almost a year, we can say that the nature of this effect is very diverse. So there are sectors that were fully affected, where all the companies operating in that sector were affected. So those are travel agents, aviation, hotels, catering. But we have a list of companies from very different sectors, from manufacturing, retail, wholesale, services, We have even companies that are working mainly with innovations and creating innovative products. We have IT companies or companies that are developing intellectual products. So those companies were hit in a very different way. Some companies lost buyers, some companies suffered bad debts, some companies lost profitability, some companies were hit by disruption of the logistic chains and etc. So in each of the case, we analyze and we search for a tailor-made solution. There are no off-the-shelf type of offering in our case because each of the applicants is quite unique. And initially, it was thought that the fund will provide financing to companies that are really in a financially bad situation. But as the economy is quite sound, most of our applicants are companies with sound business model. They suffer temporary disruptions in the activity, and we see that most of them will be back on track with nice business figures quite soon when this uncertainty with COVID will be over. So the transaction that we do are not of such a high risk as it was thought initially. Next slide, please. As most of us in the team are former bankers and we have been doing lending business for many years. So by designing the organization and the internal process, we brought in all the know-how and competence with us. So in general, the process that we stick to are very equal to the ones that banks have. We have 3 lines of defense. We have a front line. We have a second line, which is credit risk organization. We have internal audit. So we have implemented duality principle, where the business line takes a part of a decision, then the credit organization gives a duality opinion, and then we have investment committee, which consists of independent members. So investment committee takes an ultimate decision, and then we usually do a transaction, and then we have a monitoring process in place where we have monitoring of the covenants, collaterals, and financial standing of recipients of our funds. And some of the companies that have received financing from us initially in the beginning of the year have already started repaying those installments a bit earlier than it was agreed with them according to our agreements. Okay, next slide. So what we have done so far, we have already have undertakings to provide financing in the amount of 97.6 million euros. So the first 100 million that was transferred to the fund is already used, and now we're waiting from our key investor Vic to attract additional funds with the help of those bonds. So 100 million is already committed. Then, in addition to 100 million, we have 60 million euros of positive decisions by our investment committee to grant financing to the list of companies. So 160 is already, I would say, committed, almost committed. And then, in addition to that, we have 120 million in pipeline. So companies are working on documentation. We are doing analysis, preparing ourselves to go to investment committee to take decisions. So this pie chart on the left side, you can see the distribution of sectors or kind of composition of our portfolio and pipeline. So we see this diversification of our portfolio as one of the ways to manage risk and to secure a good quality of our books. On the right side, you can see the names of transactions that have been done so far. So this is not a full list. Those are just the names, and I guess especially Lithuanians will recognize most of those names. So this is bright side. We have one kind of not so happy story in our books as well. First, the transaction that we made was in Erstena, and it was quite widely covered in media. Most likely will turn into credit losses for the fund. So this is a bad story, but what's good about it is that when the fund was designed, and in all calculations and modeling of fund results, there were 10% possible credit losses encrypted. So this 10% we use in the calculation of as a cost element in our pricing. So the anticipated result for the fund at the end of the day will cover this first loss and possible future losses. So in our activity and pricing, we have embedded this safety buffer for future losses. Because, like I said, initially the fund was designed the way that it will be suffering losses because the fund is providing liquidity and investments to companies that in a need of that and that are not able to get it from banks or anywhere else. So naturally, any institution that is engaged in the lending activity at some point of time is suffering credit losses. So we will not be exception. But from our side, we are okay from that side that we modeled very carefully how much of the credit losses we might be suffering, and currently from PD ratios of the transaction that we are making, we see that we will not reach those 10%. This will be much lower. So which means that that results for the fund will be better. Okay, and then the next slide. And now the word goes to Paulius from Luminor.
Thank you, Dainius. Thank you, Robertas, for the insightful presentation. So, dear participants, my name is Paulius Vyšniauskas. I represent Luminor Markets, and we act as a sole mandated bank for this important transaction. Now, before we move into and open for Q&A session, let me just quickly walk you through the key terms of a transaction we are looking at, and obviously the next steps in the process. So you have just seen the presentation of Valstybės investicinis kapitalas, the issuer. We are looking at euro 30 million transaction under 400 million euro framework. Transaction is seniored and also under guarantee provided by the Republic of Lithuania. Guarantee is unconditional and irrevocable. We are looking at 4 years maturity. Issuer has a right to call the bond in full after 3 years. Use of proceeds have just been presented. The proceeds will be directed into the fund that is managed by Dainius Vilčinskas. We are targeting professional clients and eligible counterparties, standard wholesale denominations, 100,000 euro plus 1,000 euro. The pricing and coupon rate will be set in the book building process. The transaction is governed under Lithuanian law. The program has been assigned a flat rating by Fitch Ratings Agency. And also transaction has all the typical investment grade undertakings, including change of control, cross default, and also very importantly listing failure, as the intention is to apply for listing at Nasdaq Vilnius Baltic Bond list immediately after the settlement. So I think I have covered the key terms. Now turning into the next steps. So we have started the marketing of this transaction early yesterday. Thank you for the feedback so far. Feedback keeps coming in, and obviously subject to the final feedback this afternoon from investors. We are aiming and looking to announce the deal as early as tomorrow morning. So without further ado, probably let's open the Q&A session, and I see that questions are already coming in.
Yes, indeed. So thank you very much for the very comprehensive presentation. Now we will proceed with the questions, but before that, I would like to remind all the attendees that you can send in your questions in the question box of your screen. So let's proceed. The first question that we received is as following. In the viva.lt website, it says that the fund will provide loans and invest in debt and equity through the end of 2021. Could you please comment what is the end of 2021 statement and is it correct? Thank you.
Dainius,
I can take this one. So currently this date is correct. Our investment period should end with the end of this year. But like Robertas was mentioning already, now we are getting indications from various sources that European Commission will prolong this investment period till mid of next year at least, because the COVID issues are still relevant for most of large European countries. So all of the companies are advocating for extension of this communicate period. So we expect that this will be prolonged. In worst case, if it is not prolonged, we still have a pipeline that is relevant till the end of this year. So we are planning to take decisions and sign contracts with applicants till the end of the year. And actual disbursement of funds will proceed throughout the next year. And the purpose of those applications are quite different. For some companies, we are financing working capital. For some companies, we provide financing for the development or investment activities that were suspended or affected by COVID. So disbursement will be longer.
Thank you for your answer. And another question which is related to that is, are you planning to deploy the stage 2 400 million euros by the end of 2021 as well? Thank you.
I would answer that as we mentioned, depending on lots of circumstances. At this stage, we are planning to go to the market up to 150 million as we have state guarantee, as we see what's the market, what's the need for the businesses. But of course, there are two scenarios. One scenario that EU Commission could prolong the terms, or additional could the market need the business could provide the needs in autumn, and we'll see what's happening then. So actually, we're having the program. It's open. At this stage, we are planning up to 150 million, but you never know. So we are planning, and we are having the possibility to go on the market.
Thank you for your answer. Another question that we received is, how much of the fund capital of those 100 million euros from stage 1 has been deployed already? Thank you.
I think I mentioned this figure during my presentation. So if to be very accurate, 97.6. But now we already have draft of a contract to be signed on our tables that will go over 100. So for that purpose, we already are in the need of additional funds.
Thank you very much. And is there some ESG procedure or policy in place for the fund? Thank you.
This question excites me a lot. Although ESG attributes were not mandated to the fund, because the purpose of the fund was to keep companies alive. But we want to be visible, as a state agency through this ESG perspective. For that purpose, we put lots of focus on ESG, and we're developing ESG policy. And for next years to come, we will be having ESG criteria and KPIs for the fund. So we will not be having hard requirements for our applicants, but we will be trying to convince them to implement the best practices, would it be in governance and transparency, corruption fighting, or or social aspects as equal pay, non-discrimination, and etc. So those requirements we're gonna pose, not as a hard ones, but maybe as a soft. So we will be talking to about ESG with our clients, and we will make already for this year ESG report about what we do in the agency and what we're planning to do with our portfolio.
Thank you very much. It was actually, you also answered the next question, which was related with the ESG. So kind of a very important topic for the investors. And we have one more question, which is as following. Does the guarantee cover the whole program as a whole, or does it cover specifically tranche? Is it possible as a risk scenario that VIC issues more than 150 million of bonds and we will end up with the guarantee covering only part of those notes? Thank you.
Let me take this maybe just to be fully clear. The bond program and the framework governs issuance up to 400 million euro, right? Guarantee has been issued in the amount, a total amount of up to 150 million euro. But very clearly, I would like to state that the bonds will not be issued if further guarantees will not be provided. So, I mean, once the 150 million amount is filled, further guarantees will be needed. So I hope this is now very clear. So it's all the issuance is fully guaranteed by the Republic of Lithuania.
Okay, thank you for your answer. Another question is to Fund GP, which is as following. How will you prioritize the target companies that are in need of financing, sector-wise, company-wise, or state-owned companies, etc.? Thank you.
State-owned companies or municipality-owned companies are out of our scope. We don't provide financing to those companies. Then speaking about other companies from any other sector, so currently we don't prioritize. As we have 100 million on first stage and then up to 400 million in a second stage. So we have room to provide financing to all of the companies that apply to us. What we analyze and what we try to evaluate is companies' ability to service the debt that the company is getting from us. So credit worthiness, this is the main criteria, and of course the eligibility to financing, second important criteria. But sector-wise, we don't prioritize. If company is eligible and is able to service that, then the probability is quite high that the company will get it. Well, I have to say that during our work experience, we had a number of transactions that we have declined as well, because companies were not transparent enough, had some possible signs of IML issues, or had quite bad credit worthiness.
Thank you very much for your comment. And as we have a few questions left, I would like to remind everyone of the attendees that you can send in your questions at the question box of your screen, and they will be asked here in the Q&A session. So let's proceed, and we have one more question, which is as following. What will happen to the coupon if not called after 3 years? Still fixed or floating? Thank you.
Yeah, so probably this is my question. Thank you for the question. So we're looking at 4-year instrument, which will be priced as a 4-year instrument based on the 4-year benchmark. Just that after 3 years, there is a issuer's right to call the bond in full. So it will still be, if it's not called, it will still bear the same coupon as was initially set at the pricing stage.
Thank you very much. And the last question that we have so far is that by saying ECB eligibility yes, do you have in mind VIK as an agency or this particular issuance? Thank you.
Yes, also very good question. So obviously, if for For ECB eligibility, instrument eligibility, obviously the agency has to be accredited and endorsed by ECB as eligible agency. So this is yes. And then obviously all the instruments issued under the program will be applied for ECB eligibility.
Thank you very much.
I'm referring to eligible collateral in that context.
Thank you for your answer. So it seems that all the questions have been covered, and on behalf of Nasdaq Vilnius, thank you everyone. It was our pleasure being with you today. A recording of the presentation will be available in the Nasdaq Baltic YouTube channel. Dear management, thank you for the presentation and a very interesting Q&A session. Have a good day everyone, and goodbye.
Thank you. Bye.
Bye.
Bye.